So in today's video, we'll be running through my 6-month showdown test on Global X versus JPMorgan funds. Which income ETFs are worth holding? So let's jump into my portfolio, and the real results are in from it. And I'm going to make changes according to this. What I've been testing over the last 6 months, I've been holding 5 high yield UK listed income ETFs, and I've been comparing them on how they reacted to the market downturn, how they recovered in bullish cycles. I'll be comparing the total returns, which is the capital plus dividends, the fund structure, the strategy, and also the fees. So these 5 tickers are all popular choices for income investors in the UK, but not all of them delivered the same. I'm now ready to make some major adjustments for the data that I have actually got in front of me. So let's run right through it. So these are the funds I've held so far. QYLP, which is the Nasdaq 100 covered call by Global X. Then we have JEIP, which is the US Income Fund by JPMorgan. Then we have XYLP, which is the S&P 500 Income Fund by Global X. Then we have JEQP, which is the Nasdaq 100 Income Fund by JPMorgan. Then we have JEGP, which is the Global Equity Premium Income by JPMorgan. And I've been running these 5 together because they have similar strategies running on a similar index slash type of stocks that they own. So the 6-month total return performance, bear in mind this happened within a market downturn, so all the funds haven't done bad. It's just this is what happens in a downturn. These high yield funds get hit pretty hard, but we've also had a recovery from these within this 6 month, so it's great to see that downturn plus the recovery as well. And as you can see, one has outperformed the other. So QYLP went down minus 13.71% on total return. XYLP went down minus 10.5% on total return. JEIP went down minus 6.84% on total return. And JEQP went down minus 8.79% on total return. Whereas JEGP went down 0.11% on total return. Despite having similar strategies, JPMorgan funds have clearly outperformed Global X in both downturn protection and recovery strength. So looking at this data, I'm going to be selling QYLP and XYLP. And the reason for that is really poor performance. They have been worse on the downside performance than JEIP and JEQP. Exactly same index, just a different strategy, a different fund manager. So for me, in my portfolio, I don't think there's no reason to hold QYLP and XYLP. I would rather just hold JEIP and JEQP personally. Some other people may feel differently, but that's just how I feel. I won't bat an eyelid about putting my money with JPMorgan. A lot of the funds have done absolutely amazing long term, and they are one of the biggest banks now in America. No qualms about putting my money in with JPMorgan. Another thing is they have weaker recovery when markets bounce back up. So QYLP and XYLP had worse recovery than the JPMorgan funds. And also the Global X funds had higher downside, particularly in QYLP and XYLP. If we look at QYLP and compare it to JEQP, which is the same index, QYLP went down minus 13.71% and JEQP went down minus 8.79%. So the Global X has seen a lot more downside, and it's because of the strategy that they've been using. So Global X uses monthly options such as at the money covered calls, so that caps upside, and it's a really aggressive strategy for income. Whereas JPMorgan, they've got a more tactical, actively managed option strategy to avoid selling calls in upward momentum, etc. So it's more actively managed. They use ELNs as well. So all of this put into the funds, these are going to outperform long term, and especially JEQP, I think that one's going to perform very good long term, which we've already seen in America. So also the fee comparison, so Global X is 0.45% management fee, whereas JPMorgan is 0.35%. So JPMorgan even wins on the management fee, and they run a better actively managed strategy. So in my eyes, I think JPMorgan is going to be the better pick for me right here. They've got the same benchmark, same yield, a goal-ish roundabout, but Global X delivered worse results. So for me, I'm just going to hold the JPMorgans instead, and I'm going to be more happy this way. The reason why I'm keeping JEIP and JEQP, JPMorgan funds are staying in my portfolio because they showed better downside protection, stronger recovery from the market dip, more active management, smarter risk reward choices by the management team. Lower cost for a start, so 0.35 versus 0.45. And obviously, if you're from the UK, if you own JEQP, you avoid FX conversion fees, so that's even better for UK investors. So I'm going to be using these as part of my income strategy now. And another thing I want to run through in this is JEGP. So I'm just going to start with, it was very defensive within the market downturn, but when it's come back to the bull cycle, we've not seen no recovery in that share price. And I've been monitoring this next to gold ETP in my portfolio, and it's more of a hedge than something that goes up. So, for example, gold ETP, when markets go down, gold ETP goes up, and I put JEGP outside of this, and it's been doing exactly the same. So, JEGP acts more as a hedge, similar to gold ETP. So when markets fall, this holds up and goes up slightly, but when markets rise, it actually goes down or lags behind. I originally bought it expecting a mix of dividends plus upside, but it's not capturing the growth that I need. So for me, JEGP hasn't got a place in my portfolio. I understand this is great for some people, some older people who want to hedge in the portfolio, they will love JEGP. So don't get me wrong, it will suit some people's portfolio, but it's not going to suit mine. And so far, it's actually underperformed the other income ETPs, both on recovery and total return. So that's something that you've got to be aware of. This could be ideal for someone who wants a defensive position in their portfolio, but just not for me right now. I'm still going to be tracking total returns over the next couple of years, see how it evolves, but for now, it's going to get the chop from me. Total return is my ultimate indicator, not just the yield. So I've just put a quick guide summary at the bottom of the strategy breakdown. So QYLP XYLP have at the money monthly covered calls. They have a higher yield, limited upside, and really aggressive with the options strategy. JEIP and JEQP have an active tactical options writing strategy, balanced income and capital. And JEGP, it's global premium income and it's very defensive, good in downturns, moderate income, but it definitely lacks on the upside as it's more of a hedge in my opinion. So my updated portfolio, I'm keeping JEIP and I'm keeping JEQP. I'll be selling JEGP sold, and QYLP XYLP will also be getting sold. So final thoughts, guys. This 6-month experience has taught me a key truth. It's not just about yield, it's about total return, downside protection and smart management. JPMorgan's funds, JEIP and JEQP delivered on all fronts as they went down less in the market downturn. But when the bull cycles come back up, they also caught the upside. They're paying high dividends as well, which is really great. So I'll continue to be observing JEGP just to check that maybe long term it may have a position in my portfolio, but right now it hasn't. I'm going to keep my eye on the total returns, on how it performs. And also the global X's didn't hold up as good as JPMorgan's, so for that I'm just going to put my money into the JPMorgan funds instead. So guys, I want to know now, are you team global X or are you team JPMorgan? Which high yield funds are in your portfolio? And please let me know in the comments whether you like this video, if you also invest in the global X's and JPMorgans. Let me know if you're keeping them, if you've got them in your portfolio. I would love to know, guys. So thank you very much, and I will see you on the next.
Talk about Snowball. If you want 10% off Snowball, please use the promo code below and my link below, Cashflow King, to get 10% off. If you would like to use my pie so you can invest exactly the same as I do and the rest of the people who have also copied my pie, a lot of people have also pulled the trigger on this. If you want to join a Discord also with other like-minded investors, you can do that. Join our Discord, guys. Let's get talking.
Please remember to hit that like and subscribe button, guys, and also hit the notification bell to keep updated with future video. Thank you, guys, and I will see you in the next one.